So I had some challenges. Got it. I'll try to speak loudly. I'm hearing definitely. Yes, it can be a challenge. And let's see, the only other thing that would be interesting is I've done this for about 26 years. When I say this, I don't mean what you do. I mean finding out how to insure asset-backed securities in homes and cars and malls and helping bankers understand the rhythms of those industries. And hopefully what that is about can help all of you.
Well, I'll add too, we've been friends, seems like forever. HSAs, before health savings accounts were even around. Under the ADA, Kevin also founded and runs the HSA Council, which is FinTechs and banks and insurers. And when the whole idea of HSAs came up, I was at KPMG and I went to my boss, who's the global head of banking, and he says, "You want to do what?" I said, "I don't even know what you're talking about." And he said, "If you can get the head of insurance, the head of banking, and the head of healthcare together, and you can get them to drink your Kool-Aid, then you can have this team of really smart people who are going to create the models and all." And that was, how many years ago was the HSA Council?
Well, let's see. So it's 25, so it feels like 22 years ago. I don't look a day over 70, but it's been an interesting ride.
So you got two hats, the insurance hat and the HSA hat. So part of the reason you're really hard to reach is you are constantly at conferences.
Yes, all the time. It's a conversation.
And it's, so one of them is NWEL.
Yes.
So National Council of Insurance Legislators. And it has, obviously, the state legislators there, but it also has all the big insurers. So we got to testify there. So the legislators are in front and all the insurers are in back of us. And it was a long conference, right? And people were distracted. But when we got to talk about disaster savings accounts, even the legislators put their phones down. They were taking notes. The main question we got was from the lady that asked, "Well, is this going to be as tough as HSAs were to, like, do we have to take a piece of receipt or a piece of paper and fax in?" And said no for FinTech to address that.
That and a lot changed. And maybe just a minute to, first of all, does anybody have a health savings account? Is that how you insure your health? So some of you know what we're talking about. It's account-based healthcare. And there's really no magic here because you have a bank account. And even if you don't have an HSA, you have a bank account. And you have this massive deductible at this point, and you pay your deductible somehow. HSAs allow you to pay for that on a tax advantage basis. And what we're proposing is HSAs for your house or your condo or just for you. And so a tax advantage way to protect your assets, to protect yourself, and to recover from problems using, and in the law, these are just bona fide trust accounts. And so I was a big friend to the gentleman, Vin Diesel. We'll just call him Vin Diesel, because I can't remember his name. A big friend of Vin Diesel who said, "What are your challenges?" Well, you have challenges talking to all these people. I'm going to skip over that part because I can't do that. But what I can do is go to insurance regulators and insurers and say, would you rather have a world where you're recovering from a disaster or getting ready for one, where everybody has money in a purpose-built account, like we do in healthcare? Or would you rather have the kind of people that go to HMOs? They have zero at the beginning of every year. Well, if you have an HSA and somebody puts your hand up, you don't have zero. You have something. Doesn't matter how much it is, you have something. So you've got a little bit of a head start, and it's the kind of something that Americans really enjoy. It's your something. It doesn't belong to anybody else. It belongs to you. That makes you think differently. And we thought that was the thing that would actually make buying, you mentioned buying resilient roofs in Alabama. Well, we know those people. That works. That's a good idea. There's a gentleman named Lars PaaL, university professor, University of Alabama. He said something arresting. I'll share it with you. You can reduce the debris in any disaster area by 75%, and you can keep the roofs on the homes. Well, that sounds extraordinarily illogical. I'm sure we'll ignore that as a culture for some time until we all figure that out and then do something about putting better roofs on houses. How do you want to do that? It would cost you 25% more to do that without a DSA than with a DSA, because one has tax advantages. That's what we're talking about. But I'll make one more point, and I don't want to take up all your time, but you understand you can do it now, because bona fide trust accounts don't require you to act. Your employers do it now on your behalf for your payroll system, which is to say they use their transfer bank. You have a bank. What do you give your employer? Routing number and account number, and then magically your money shows up. That's all we're talking about. And so any comptroller, any state treasurer, any emergency management group that wanted to do a pilot can open bona fide trust accounts for everybody who's 21 who has a driver's license, everybody who pays property taxes, everyone who says they are the guardian of a child in one of the county public schools. Pick your database. It's possible now, you just can't have the tax breaks yet.
Absolutely. And part of our storytelling is often this slide talking about the increase in insured, uninsured. Do you want to speak to this one?
Sure. And I like, again, where Vin Diesel started 20 years ago, Katrina. I read a story there, and the story, and you should never do that, but I read a story on the way, and it goes like this. The same complaints from consumers in 2005 are part of the Helene story that was just last year, which is, I can't get my stuff. Where's my money? Well, okay. That didn't make me feel very good, because it means that we haven't, we're all working as hard as we can, but the experience of a person who's standing in the mud is pretty much the same as it was 20 years ago. And that's really too bad. And maybe that's the thing that should change, because the graph is telling you the storms, are they getting more powerful or not? Well, that makes me put a foot down on the climate change thing, and I'm not a scientist. I have no idea. I know that we have many, many, many more expensive homes in the way of those storms. I know that. And I know if you were in Fort Myers, Florida, when I was a boy, you would see nothing but the occasional fishing shack. And now the beach is covered in $1 million homes. So let's talk just a little bit about capital. An insurance company is a bank. They have to reserve capital for the risks they take. Do you know how much capital is tied down every square foot of beach in Florida? Because what you're putting up there is so expensive. This is the problem. Yeah, sure, maybe storms are getting worse, but you have to attract capital in the same capital markets where Nokia is selling chips, and you're Allstate. What do? How do you want to get people to invest in you? Hands up, can I invest anybody's retirement savings in the property casualty insurance industry? Who would like to do that? I still have my license. Anybody. Now you know all you need to know.
So Kevin, we kicked off talking about, I went to the 20th anniversary,
Yes.
20th acknowledgement of Katrina, and got to visit with one of my favorite grizzled bartenders. And she said, because I told her I was coming here, and she said, tell them that if Katrina hit again, nothing's changed.
No.
We got the same fraud, the same graph.
We had one other interesting thing, and it's contemporaneous. Local government has gotten so much better that the New Orleans Police Department hasn't been able to occupy its headquarters all summer because they can't figure out how to get the air conditioning contractor to show up. Triumph everywhere we look. This is how we go in parties. That's why I don't. It's nice to see you. So.
All right. This one too. Deductibles increase.
Sure. We're noticing, and the healthcare experience is where you should be. High deductible health plans. You need to have special insurance to have an HSA. That is a mistake, but we thought it was a good idea back then. We're not going to tell the insurance industry to do anything different than they're already doing. And what are they doing? They're raising people to deductible. So you do you. Banking will do banking. We'll go and we'll try to get a DSA that has all these tax advantages so that you'll have help affording your higher deductibles. But wait, it's not what happens in year 1. It's what happens in year 3 and 5 and 10. By the time you get 10 years of savings under your belt, we're hoping you're going to be able to go to the property casualty markets and buy $25,000 deductible insurance. Why? Because that first dollar up to the $2,000 is extraordinarily expensive to insure. Not the $20,000 It's getting much cheaper on the curb. And so one way to help, and it's over time, remember that, it's over time. One way to help the insurance industry recapitalize itself is to buy less of it and let deductibles climb naturally and give people immediate help on the tax side so they can afford those deductibles and save for them. And who also said it was they're getting your employees back? Big article by former Mississippi Governor Haley Barbour, which is where Mobile is next to, right? Mississippi, Alabama, they're right next to each other. What did he say? Well, what was the problem in Katrina? Well, everybody who was going to be in the store or selling you gas or working in the motel, they're victims too. They're on the road. They can't help you. Well, we need to fix that. DSAs are supposed to be an employee benefit so that the people who we need to help with the recovery actually have homes that can sustain the damage or the resources to do something about it. That would be helpful.
So I'm going to skip slides because I do that.
Well, we don't want to share the bad news, which is state-based DSAs exist, but they exist in the South, where they've had the fortitude not to have high income taxes. They don't exist yet in places like New Jersey, where they have confiscatory income taxes. That needs to change. The income tax.
So we heard from Honey about the Los Angeles fires and how quickly UX stepped up. And every time Kevin and I have done these presentations on disaster savings account, catastrophe savings account, it comes down to the data. It comes down to you don't have to tape a receipt on a piece of paper and fax it in to have it adjudicated. So it's the data. Yeah. Can you talk a little bit about, you've been part of this conversation too, what we're trying to explain.
Yeah, even talking with, is this on?
Let's turn to read.
There we go.
Yeah.
Yeah, you even talking with Mark earlier, right? And just in working with PaaL, I think it's helpful to give some context to where we started on the whole data delivery, driving, digital payments platform, because it's really relevant. Like, some of the use cases that we started with 7 years ago, we worked with some of the largest consumer packaged goods brands in the country. And they were trying to simply take a check, something physical, and deliver it to their consumer in a digital medium. They were just struggling to do that. And so we built a payments platform to digitally provision that to the mobile wallet in seconds and be able to report back on that data in real time for our clients. We took it a step further. We built the platform on blockchain, not from a cryptocurrency perspective, but from the ability to track and trace that payment, the entire life cycle of that payment, because that's what blockchain is. And so, we talk about technology, and there's a lot of complexity and patents in what we do, and we're the only company in the world that can do item-level gift cards, mobile wallet. We've got the patents on that. We've got technology that we've invested a lot of time and resources into, but technology bores people. People don't care about technology. What they care about is, can you help me? And when we started working with Kirsten, and we started meeting organizations like IRUSA and others that are just trying to get funds in the hand of people who need it, it's like, why is this so complicated? And you start to realize why it is. There's a lot of layers and politics and complexity, but at the end of the day, we feel so blessed to be able to empower people in this mission to be able to digitally disperse funds in seconds to consumers and control those funds and report back on that data. So today I can drive these digital payments anywhere. Visa or MasterCard's accepted. In the US, I can do it precision by day, by time, by location. We've got partnerships in place with NCR, integrations into Toshiba, but also the cloud-based POS systems as well. So we're building out that SKU level, item level network to even be able to take those payments to the product level and provide even promotional value on top of the disbursement. So I think somebody said earlier, hey, I want to give funds out on behalf of the funds, right? Promote people to actually use this for my product. So there's a whole ecosystem in the world that we're just so excited to be a part of and really helping this mission. I think it said something about physical cash. There is a need for physical cash, right? There's not like a one-size solution fits all. And so I think, as a community and as leaders, we need to work together to kind of put those solutions in place to be able to give organizations the tools that they need immediately when they need them. And that's something that UX we're extremely passionate about.
Well, it's interesting, for those of you who've heard this story, I apologize, but it was presenting at a conference of mayors, and it was on disaster preparedness. And I was a banker doing here, like, you can't drive a loaded backhoe, what good are you here? And so I got up and said, I'm going to talk about FinTech. And one guy says, oh, you like to fish? FinTech? And he was serious. So as y'all are out talking to these communities, keep it people-based, like why do you care? So it clicks, and he's a mayor of a city in Florida that's hit a lot with hurricanes. And he said, wait, are you telling me that for each of my residents, and I know who they are, their driver's license, voter ID, whatever it is, could your partners issue an account and it'll just sit there dormant, but it's already validated, you know who that person is. And it'll sit there, and then 4 days before the hurricane comes, we'll load money in, but it'll only be good for hardening the house. Sandbags, little tarps, whatever. And yeah, that's possible. And he's interrupting the entire panel, right? He's just riffing from the back of the room. And he said, well, the next 2 days before, could we put more money in? And this time it's only good outside of the blast zone. So people are already safe outside of the blast zone, and it's for hotels and whatever. And then he asks, when it's time to come back, we really want to fuel the local businesses. Could it be only good within the blast zone? And so all these other mayors are super excited that this guy has gotten it, but it's data. And they couldn't conceive that this was possible to do. So there are, like Kevin said, there are a couple states that have, they call them catastrophe savings accounts. If you read the language, it shows you why you need good lobbyists to help you word things the way they should be worded, because they could use some improvement. But do you want to talk a little bit about states that have them?
Sure. And first of all, you can see the flag of the state. South Carolina, when she was in the previous group, when she was talking about that, they have them there. They haven't taken off. They have them in Mississippi and Alabama. By the time we get to Christmas, I'm hopeful they'll be in California, New York, Georgia, Utah. And so at the same meeting where Incoil decided to embrace the concept, we wait 8 months, now we have an actual model act. And the idea here is that any state can take this model and then pass it. What does it do? It lets you, as a state, define the circumstances under which people can use tax advantage money in their state and then use it after an event. The challenge, well, there's not a lot of high taxes except in blue states, although the blue states are adopting this faster than the red states. Take a state like Kentucky. Kentucky is supposed to be a red state. They have a blue state, or they have a Democratic governor. We're talking to, I think it's the head of the insurance committee in their house. They are on the path to get rid of their income tax by the time 3 years lapses. So they weren't sure they should do something like this. I said, well, it's still worth doing because you get a chance to have people spend their money differently. It becomes an employee benefit. It sort of speaks to this whole resiliency thing, but what is it really? Well, if everybody in this room had a special purpose account we could link to Delaney's Visa cards in and use his FinTech on, would we be better or worse? We'd be better. And so wouldn't it be nice if we could just have this platform sort of roll out across the states? This is helpful for another reason. We're going to see probably 20 states either introduce it or pass it in the next year, and I mean 2026. That's critical mass, because 20 states means 40 U.S. senators. When 40 U.S. senators have come from a state where there's already a catastrophe savings account, making the ask for the much larger disaster savings account won't be quite as hard. And the way we're going to do that is take that university professor we talked about earlier and demonstrate that people with special purpose disaster funds are inherently less risky and can buy insurance at inherently better prices and have a stake in making sure their dwelling is more resilient than anyone who does not. And that's the culture we need to build. And we can't do what you do, but we can do what is in our wheelhouse. And that's build the financial infrastructure that helps companies like his thrive and gives the chance to everybody else to subscribe without having to be experts. Okay, that's the key piece of information. Is anybody an expert? No, you just get paid, right? Your paycheck shows up. Well, that's what we're looking to do. Your disaster funds just show up.
Here's, I want to say something about users, because I think that's an important thing to call out. So we talk a lot about the payment side, but when you talk about digital, it's really the whole end-to-end consumer journey. It's the authentication, it's the serialization, it's the one-time use of value, and I'll say that very specifically, value to a user, and being able to manage that, on behalf of that user. And so I totally aligned in terms of really being able to track from the user level all the way through the redemption level. And I think that's a gap. My CTO always used to say, you put a physical coupon on the internet, you just increase fraud. Because, and that's what today's digital promotions are. They're just digitized versions of physical paper on the internet. That's not a serialized, one-time use ability to manage at a per user level all the way granularly through to the POS. That's what we're talking about here. So when you apply that and you give somebody access to funds that can be reloaded and obviously be driven for specific purposes, you take the fraud away.
Yes, you do.
And you give the funds to the recipient that needs it. So it's not a hard sell. It's like something that should be happening, and it's just more and more of that momentum and wave.
You were just talking about fraud, and I forgot to mention, there is a link tree associated with this event. It's the QR code on the signs out there, and there are so many reports in there and studies that you can read, and one of them is from Rolling Stone magazine. It has really good citations and data in it, but it's called the $1 trillion something, and it was about COVID, and that at least $1 trillion of $5 trillion went to fraud. And that's our current administration efficiency and controlling for waste, fraud, and abuse. And with PaaL's mission, right person, right time, right purpose, and the data to prove it, it's all, like we've heard several people today say, this is the time that we landed here. So on the TSAs, so people who have HSAs, you, your employer, generally are who puts money in. But some of our discussions have been for low and moderate income folks that nonprofits perhaps could put money in, that the government could perhaps put money in, but it still needs the guardrails.
It does. It does. And the way that we invite you to draft the amendment, we think we have it pretty much figured out. But we're talking about the IRS here, and so that's a challenge. You have to make this reasonably precise. Because in a tax advantage account, we don't want people to get 2 times the advantage. In other words, if St. Vincent and Paul deposits a bunch of money in someone's account, that account says on the system, well, you get $5,000, for $5,000 every year is deductible to the participant. Yeah, but they didn't put it in. It wasn't in their hands. This is a charitable contribution, or this is from SBA, this is from FEMA. And so we have to treat that money differently. Because the technology exists to do that. Well, of course it does. That's not that we even do that in the health space. We call it stacked multi-purpose. You have an HSA, you have an FHRA, maybe you have an FSA that goes with it. So we know how to do all of that stuff. Do we know how physically, technologically to differentiate between government money, charitable money, and then the money that you and your employer are putting in? Well, of course we do. But that would be the kind of thing that would, I think, propagate this both politically and culturally, which is nobody gets left behind. Because you can also put on the top of that, someone like me, for example, and I think you can really only use yourself the way that privacy laws work. Someone like me, I don't need charitable money to figure out how to get out of the way of a hurricane. That's not true, almost everywhere else. And so how do you fix it? That's how you would fix it. And we look forward to that amendment. We think it would be well received by both sides. Both sides having looked at this we've heard no objections politically, so long as no one gets left behind. I think we can fix that.
Well, you've been working on this for a long time, and you've gotten from all of these constantly gone travel of yours a lot of support. Do you want to speak to this a bit?
Well, if you look down that group, it's an incomplete list, it grows. But essentially, all the property casualty interests in the country want to do this because it takes the pressure off them over time. That would be the agents, the brokers, and the underwriters. The reinsurers think this is a good idea. So do consumer advocates. Their experience, and everyone here is trained to think politically, so am I, but I get out of that realm from time to time, and they're just thinking about what happens when you give someone who doesn't have a lot, a little bit more. Well, they're excited. How many of you log into your banking app frequently? All the time, right? Well, you'll find that dynamic in HSAs. They log in all the time. What's that tell you? Do you log into United Healthcare all the time? Anybody logging into Signal all day long? No. But you're logging into your bank all the time because you treat it differently. And so the consumer advocates are with us. All of the elected officials in legislatures have only one question. This is a great idea, both sides of the aisle. But it's such a great idea, you're now competing for budget space with things like R&D credits and in other words, non-associated budgetary issues, because everything requires that. One bit of tutorial, which is, and it just happened in the One Big Beautiful Bill, where HSAs were expanded. They get a budget score. Well, if you appropriate money to put into the various programs designed to help the survivors, the victims of Helene, that is an appropriation. You go to the Treasury, you take all of our money, and you hand it to somebody else. Isn't it different on the account side? Because the government never actually sees that. And so we've tried to make the argument that it's a little different when you're talking about not collecting revenue. And I use this example. If you were up for a really big promotion or a big job, you don't get it. Well, you're not in debt. The difference between what you make and what you were hoping to make, it didn't cost you any money. You just didn't get it. The government starts seeing it differently with disaster savings accounts. They haven't done it for health savings accounts, at least not yet. But for disaster savings accounts, we're trying to explain to the people that tell Congress what things cost. No, you have to treat this differently. It won't cost what you think it costs because the country will be much different after this happens than before it happens, and we'll actually save money over time. A bold statement, we'll see if we can prove it. The other groups you want to see here are your retirement funds. What would they give? Well, where do you get money if you don't have any and you just been booted out of your house? You lose your 401k. And so all of the retirement managers in the country are thinking, well, this would be a lot better, not just because they would get to manage a different account, they would, but the stack of money they currently have goes down every time we have an active hurricane season. That's what we're, and you.
Well, us.
And you.
Well, it's been exciting, and we don't have a slide for this, but the number of people in the U.S. who would be eligible for DSAs is 2.5, 3 times?
Almost 4 times the HSA community.
So for all of you who are FinTechs and you like new accounts, it's a big opportunity now. Now, DSAs don't exist yet. There's been huge progress on the legislation, and the fact that you drove so many wins on HSAs in the recent bill was amazing. So we've got a playbook that we ran for HSAs back in the day. It's the same playbook, it's just a better story because there's 4 times the number of people, nobody gets left behind.
And we don't have to define a bespoke insurance product. It's called high deductible homeowners insurance. That would be a marketing triumph, just like high deductible health plan. We don't want that. And so insurance, we'll do insurance, we'll do the accounts, and then you guys will have some place to launch hard from because everyone will have a special purpose view.
So by this time, we had most of the attendees in Miami around our stage, and coming off the stage, everybody was mobbed. So thank you for the review of Miami.
No problem?
We have a break, so there's some snacks over there, I think.
Excellent news.
And applause for our panel.